Hello, everyone. Hope you're well. Welcome to this version of Monday Night Live. I'm going to start promoting people, so hang on just a second, but let me first get the chat set up. We had a great weekend, by the way. And okay. Okay, I'm going to start promoting you, so give me two shakes of a lamb's tail here. Let's see who we got here. Let's see. Wilson Zimmerman. Oh, welcome aboard from the 757. Good to see you. Steve, good to see you, buddy. Let's see. Shirley, interesting information from the Reno. Well, Shirley, give me a call tomorrow or let me know when you're free. I'll fill you in on the details. Could be interesting. Let's see. Roger, good to see you, buddy. Let's see. Randy, all right. Welcome aboard. Brand new. Welcome aboard, Randy. Chris, good to see you. Hope you and Trish are doing well. Let's see. Looks like we've got some guests, so that's awesome. Patty Gordon, good to see you. Nancy, welcome. Hey, Nancy, I left you a voicemail earlier. If you could just call, text. I mean, I've got calls all day tomorrow, but I always leave time in there. Mina, good to see you. I thought Michael Dunlap. Good to see you, Michael. Awesome. Welcome aboard, man. Hey, Michael, we got some good information to go over tonight about housing markets, but if you're interested in sharing what you found out, that's one of the things we do on these classes is we share stuff that we've come across. Linda, good to see you from the Gold Coast. Lori Burns, all right. Jeff Allen, by the way, guys, if you hear pitter patter behind me, the cats are going crazy because I'm back here for the first time in 17 days, and they think it's party time. So, Jackie, good to see you. I got the email. Everybody had signed the document, so I sent that to Jody. I think you already done that anyways, but we should be in good shape. Grace, good to see you. Let's see, Gina, always good to see you. Long time no chat. Let's see, David, good to see you, buddy. Colin, good to see you. Christina Coleman, representing the Peach State, good to see you. Let's see, Bonetta, good to see you. You're on here twice. Maybe one's the phone and one's your computer. Okay, hang on one second. Bill Gilmore, good to see you, buddy. Good stuff tonight. It's going to show you some more sources of information we use to determine where we are going to buy rentals and where we're going to flip homes. Okay. Betty, good to see you. Hey, Betty, you may be getting a call on another referral, so keep your eyes and nose open for that. Let's see here. Trying to think of who that was I was speaking to today. Hang on one second. Let's see. Oh, it was Amy. Amy McConnell was new to the team, and I think it was her and her family. Let's see. I don't think it was Rob, Charlie, Jason. No, I'm pretty sure it was Amy. Yeah, that should be pretty good. Okay, speaking of Amy, there she is. Hey, Amy. Hey guys, good to see everybody. Welcome aboard. Let me just double check and make sure I got everybody already promoted, and it looks like we do. So some of you have, this is kind of new because we just started this on March 1st as we're broadcasting also on Facebook Live. And what was interesting was one of my oldest students texted me or emailed me about 10 minutes ago, and he said, hey, Gary, I got an announcement of Facebook Live class you're putting on, and I got 47 views on it. Can you please explain how that happened? My first instinct was to say, I don't have a clue. But actually, I told him, I said, Jody does all the Facebook stuff for us. And apparently she's gotten pretty good at it. But the thing about Facebook Live, guys, is Facebook gives you a lot more bang for your buck when you use Facebook Live. Okay. So tonight it's John Nandy. In fact, he's looking at the team also. I've spoken to him 2 or 3 times over the last few weeks. And, it's just ironic it popped up when it did. And of course, he's following the Facebook page, or that wouldn't have happened. So what Facebook does is they look for other people in John Nandy's group who have similar interests. That's how that works. Programmatically, I couldn't tell you what happens, but algorithmically, that's what happens. Okay, so it kind of goes viral, and when you use Facebook Live, it goes more viral. It's like going from regular to high octane. Okay, so in any case, that's not what we're here to talk about tonight. First thing is, if you haven't been on for a while, just remember Beverly sends out a recording the very next day of the webinar, and also she sends out the webinar schedule. Okay. So the other changes now, all of these they're classes, obviously, so we call them classes, are now always on Monday nights, always 7 p.m. Eastern. Okay. So if I was you, I would do what happened with John Nandy, which is when you see something come through to put it out there to your folks, because if they can come on board and they decide to take a flipping program or a buying rental program, you benefit from that. Okay. So, fundamentally, you can't go wrong with having educated consumers, but more importantly, they're being trained using the same strategies, methods, and tools that you're being trained to serve them with. Okay. So, and when people ask me, how did I do so many transactions? I'm telling you, that was a key component. It wasn't just that I was, teaching them how to invest or show them what I did and things like that. It was the fact that they were educated consumers, and we were singing from the same song sheet. Does that make sense, guys? Just a hand wave or a hand raise or a chat? Yes. I don't, psychologically, I can't give you all the reasons why, but I'm telling you, good old fashioned grassroots type stuff, it works. Okay. So help your consumers become more informed, and all kinds of good things happen. They're more likely to take action because they feel more confident, right? Education and knowledge leads to confidence. They're more decisive, and they make better decisions. All those things lead to multiple transactions and more profit for them and more profit for you. So in any case, now here's what we're here to talk about tonight. I've gotten a lot of questions about how do we actually know where are the best places to invest? And I'm going to just break it down in 2 parts: buying rentals and flipping homes. Okay. So I'm going to start with the rentals first. All right. And the reason this is important is, of course, for those of you who are on the team, we have agents now in 21 different states, soon to be 24. And so we have the luxury, because of our network of agents, of being able to invest in multiple locations, having people there, feet on the ground, who are on the same team. I mean, it just doesn't get any better than that. So there's an element of trust. You trust, an element of respect. You can join venture, you can partner, you can send referrals back and forth. I mean, all kinds of great stuff happens because of this. But fast forward, what I'm going to show you is something you can use in any market to tell you where your market fits in, right? So now we'll tell you this. Hey, Melanie Abraham, good to see you. No worries. Let me, my number promote you real quick. So hang on just 1 second. Michael, good to see you. And Melanie, good to see you from beautiful Austin, Texas. Let's see. Jeff, good to see you, buddy. Representing Michigan. Okay, so first things first. I'm going to show you some screens here in a second, but I want you to write this down. When we're looking to buy rentals, the first thing we look for are one of the most affordable markets, okay? In terms of housing, that means, quite frankly, where can we get the most house for the least amount of money, all right? And your mind's probably starting to race now, coming up with some assumptions and things like that, and some of them could possibly be true. But I'll give you an example here. When we think of lower price markets, we often think of markets that are not that great markets. They are like maybe C markets at best, but that's not necessarily true, okay? Perfect example is beautiful little Dayton, Ohio, right? Sort of like the redheaded stepchild. Dayton, Ohio is very near what's called Wright-Patterson Air Force Base, famous, massive, large Air Force base in the U.S. And by the way, for all you scout moms and scout dads, they have a great opportunity to take your scouts there for a trip. I did that years ago. We got to see all the old Air Force Ones, just all kinds of new stuff. We got to see new Air Force Ones that apparently we weren't supposed to see. Do you guys know that there's at any one time 2 active Air Force Ones, and one of them is always in the air? That's what we were told. I had no clue. Isn't that crazy? So in any case, Dayton, Ohio, first time I taught there in 2015, take a wild guess what the average home price was. And Dayton's a good area, but just shout out there, type in the chat box. What would you say was the average home price in Dayton, Ohio in 2015? Don't be shy, guys. Treat just like class. And the teachers, I get to see everything you type in. So let's see what you type in here.
175.
What's that?
175.
Okay. Let's see what
190.
Oh my! You guys are
Sounds
the.
low.
All right, who put 80,000? Tony Moore. Tony Moore gets the gold cookie. It was $70,000, guys. In 20.
Yeah.
70 grand. Can you make?
What do we win?
You know, what's that?
What do we win?
Oh, well, when I start traveling again, lunch with me. I'm going to take everybody to lunch. I swear I'm going to drive all around the country and take everybody to lunch or dinner, depending on what time of day I get there. And by the way, I want you to hold me accountable to that because I'm dead serious. I mean, once this thing lists, I got a whole bunch of pent up demand to get out there and hit the road.
All righty then.
I'm
I'm
hungry.
Social media now.
Let's do it.
So I'm getting ready, but guys, I got to tell you what that means is with an average 3% commission, the agents are literally working for $2,000. Now, you know, if that was 20 years ago, 25 years ago, I'd say, well, it's, you know, it's okay, I'll take it, right? But now the average commission is $7,500 and climbing. And I don't know what it is right now. We can find out for fun. But here's what I'm getting at. The big point there was do not let the price determine your perception of the area. It could be a fine area. It just has a very low average price, okay? Now, what that means to me is I might want to buy rentals there because I know something else. So this is, please write this down. When you look at, say, two columns, one being house prices low to high, and one being rents low to high, okay, by market. If you follow the increase in home prices, okay, what you'll notice is the increase in rents do not keep pace on a percentage basis. So let me just repeat that. Let's say you've got home prices going up 10% every year. Rent rates do not keep pace with that. So at a certain point, there's a point beyond which the ends don't justify the means. You know, in other words, you're not going to cash flow in that area, right? So far, everybody just let that sink in. I just want to make sure you're okay. If you have any questions, please let me know because this stuff it's not real complex, but it's the kind of stuff you got to think about it. It's just sort of cerebral. So when you understand the principle and the fundamental, you can do business in any economy, any market. This is why I love investor real estate. We really don't care what the economy does. I mean, we care what the economy does, but relative to investing, we just want to know what it's doing so we know what strategies to use. Does that make sense? Okay. So in a declining economy, for example, we probably would not want to flip homes, right? But we would probably want to beef up our rental business and maybe do some wholesaling. On an incline, on an escalating market, you know, obviously we want to be doing some more flips. And I will tell you, rentals is always a good thing to do. I don't care if it's up, down, backwards, sideways. You'd have to really mess up to not have a profitable time with rentals. So in any case, now let me show you some examples of how we actually do this, okay? Let's see, share. And, okay, so here's something called apartmenttherapy.com, all right? And they're good for articles every now and then, and luckily they just came out with a good article last year called Cheapest States to Buy a House in 2020, okay? And some of these you'll probably expect you're gonna see, you know, Arkansas, you know, Alabama's in there, Michigan, West Virginia. I didn't expect to see Wisconsin, but Wisconsin's in there. I didn't expect to see Missouri, but Missouri's in there. I didn't expect to see Ohio, but Ohio's in there. I did expect Kentucky, Alabama, Michigan, West Virginia, Arkansas, and Alabama. But in any case, lo and behold, you get the average cost per square foot and the average price. Okay. Now, then what I would do, so for everybody okay so far? And there's other rating services, by the way. In fact, if you could write this down, uscensus.gov is an awesome resource. Okay. In fact, it's one of the websites. If you go to realestatewithgarywilson.com and you go into the members area, right, on the resource column, go down to the bottom where it says, in fact, let's just do that. I'll show you. Instead of telling you, I'll actually show you. It's at the very bottom of that resources column, and it's a list of all these websites we use to research people, properties, anything you could possibly imagine. There's dozens of them. So let me hopefully quickly get there. I'm going to take advantage of this and catch my breath, actually. Okay, log into Silver. I'm going to scroll down all the way here where it says website resources. Okay, you click on that. And here you go, bunches of them. Miscellaneous websites. Scotsman Guide's a great guide for dealing with banks. Marcus Millichef's a competitor, but they got a great website. This one we're going to use tonight, huduser.gov. We're going to use that one tonight to look at rental rates. We'll show you that in a minute. Data USA, another awesome website. Okay, this Data USA, actually, if you could write this down, write down Data USA. Also, it's .io. That's all you got to remember. And then write down citydata.com. It's not on here for some reason, but it should be, unless it's down here later on. Citydata.com is another great resource for looking at the makeup of an area, demographics, social graphics, economics, the whole 9 yards. Okay, government websites, investor agent websites, flipping, rentals, property management, wholesaling, it's all that. And for all the Canucks, we even got Canadian websites. I don't know if we have any Canadians on tonight or not. If we got any Canadians, give me a hand raise or type it in the chat box. We had the most honorary Canadian last Wednesday night, who is Louis Reset. So in any case, so back to this. All right. What I would do is I would take these 10 markets, okay? Then I would go into the HUD website that I was telling you about. So this is, again, you can take a screenshot. Actually, let me do this. I'm gonna copy this. I'm gonna paste it in the chat box for you. So hang on one second. I'll do that with the other one too. And that way you'll have it at your disposal. You can copy and paste it, anywhere you want for that matter. So let me go back here and copy and paste this one. Apartment therapy. I love some of these names. Apartment therapy. Maybe it's because if you own enough apartments, you're going to need therapy. I'm living proof. That's where all the gray hair came from, right? All those tenants. Okay, so back to this. Alabama was one of the states that was mentioned, right? And the least expensive areas. Alabama right there, $243,000. $115. Now, what's amazing, when we think of the least expensive markets, look at the prices of some of these. $243. Remember what it was like 10 years ago? Crazy. That's why I always tell people, don't ever be afraid to buy. I mean, people that try to time the market, you could be missing a lot of opportunity. In fact, everybody just put your pencils down for a second. I want to give you something, a real startling factoid. If you bought at the peak of the market before the last recession, in other words, July 2007, if you bought at the peak of the market, okay, and then you sold at the bottom of this remember this time last year, the stock market went from nearly, whatever it was, 30,000 almost, dropped down to 15,000, remember that? 15, 16,000 and dropped in half. It's all the way back up again. What I'm getting is if you'd have bought at the bottom, all right, it's probably sold at the bottom. You bought it at the top of the last one and sold at the bottom of the next one, right? You still would have doubled your money. Isn't that amazing? So in any case, let's go back to the HUD website and look at Alabama. We got all kind of counties. Let's just look at statewide FMRs. We'll click on that. We're gonna get some really good rental data for the area. So here's Alabama, based on MSAs, meaningful statistical areas, okay? And we can see the average rental rates by rental type, efficiency, 1 bedroom, 2, 3, 4 bedroom, and the percentile, where it is in the percentile, all right? So this is in the 40th percentile. So in other words, rates are at the 40th percentile nationwide, they're in the bottom half. But if you look at the rental rates compared to the home prices, they're probably pretty favorable in some of these areas, like right here, Daphne Fairhope, right? I've taught there before. It's a great area. Let's see if we can see some others here. Look at this at Auburn. I've taught there too, by the way. Great. If you like your football, man, you're talking about a pretty good place to be. But look at the rental rates. So if you look at this, typically you're going to be paying less for a rental than you will for an owner-occupied home. And if you let's say that's going to be an average of 30% discount, because generally you're not going to pay top dollar for rentals. You're going to pay the best price you can get. So let's say it ends up being $180,000, and you're getting $1,500 a month rent on that. You figure what's a mortgage payment on $180,000? Actually, can anybody off the top of your head? I don't have my phone with me to do the calculation. What would a 30-year mortgage payment be if you financed, say, $175,000? Somebody can tell me that. $175,000, 30 years, and call it 3.5%. And tell me, and unmute yourself and tell me what that comes out to.
Like
$1,200 a month.
Let's see.
800 a month, 799.
All right.
Oh, man.
Okay. So you look at that, that leaves you almost $800 before any expenses, $800 net operating income. And you still got to pay taxes, insurance, and things like that. But the thing I like about single family homes is you don't pay any utilities, right? The tenants pay all the utilities, they cut the grass, they shovel the snow. So I know an investor, by the way, in Alabama, and he purposely buys new construction, $180,000 on average, 4-bedroom home, and this is what he rents it out for. I was on a cruise with him 2 years ago. He gets a 10-year warranty, so there's literally no out-of-pocket costs for 10 years on any maintenance and repairs. And at the end of the 10 years, he sells it. That's what he does, so he's the first owner, which means he makes the most amount of money. So here are things that's a pretty ingenious model for buying rentals. Isn't that awesome? I never thought of that before, guys. I'm sitting here I was one of the speakers on this cruise, sitting next to this guy, and that's why I love doing those things, because I get to learn so much from other people. But I thought, what an ingenious model. He always rents to good people, because think about it. The tenants renting a brand new home are probably going to be pretty well qualified. So in any case, back to the clash. What I would do is I would go through all of these for the state of Alabama, the MSAs, and I would eliminate the low end areas, okay? And ironically, this sounds crazy because I just use this as an example. I'll probably eliminate the top ones and focus on the ones in the middle, because that's where I'm going to get most of my business, okay? More people can afford what's in the middle there. And I'm a numbers guy. So yes, I would like to make the most money I can, but sometimes it's not just a factor of individual properties. It's more a factor of how many income producing assets can I get for my money and rent them out. Does that make sense, guys? In other words, if I can get, let's see, that was 250. Let's say 180,000. If I can get 4 houses at 200,000, or say 5 houses at 200,000, okay, that's $1 million, or 10 houses at 100,000, which would you rather do?
So Gary, this is the question I have for you that ties into this. May I ask it?
Absolutely, yeah.
So in our area right now, our market is appreciating like crazy.
Yeah.
So I was just going to ask you the question. So do you have, like when we talk about opportunity cost or switch cost, so if I'm using this money to control an asset that's going to appreciate X% versus getting cash flow from these others, how do
Yeah.
you decide? Like,
Yeah, that's a great question, Melanie, and it's one of the age-old questions in this business, and it pops up every time I teach a class. And the good news is the good news is they're good answers too. So take like Austin. Obviously, I started going to Austin back in, when was that the first time? September 2012. Now you just imagine what's been happening since September 2012 in Austin.
yeah,
Unbelievable, you know. So there's two schools of thought here. One of them is you would want to flip in that kind of an area. And we're going to talk about that next because it's rapidly escalating and it's easy to flip in an escalating market. But let's say your strategy is long-term hold. What a lot of people do, and this is what we found out like in San Francisco, where these ratios are way off the chart. In other words, remember I said earlier, the rents do not keep up with the home prices?
right.
In San Francisco, there's places people are buying, you know, for $2 million and renting them out, and they'll start off renting with a negative cash flow, right? But they know in 5 years that property may likely double again, so they're willing to play the appreciation game. So in other words, if you're comparing appreciation and cash flow, every investor is deciding whether they're going to focus on cash flow or appreciation or some combination. In San Francisco, that would be an extreme calculation where everybody's focusing on clearly appreciation, almost no cash flow. Place like Dayton, Ohio, it's almost 100% cash flow, but almost no appreciation. Now that's the market part of it, the market dynamics part of it. The other part of the answer, Melanie, is it's a personal choice. So for me personally, in my 20s and 30s and 40s, I focused on cash flow. So I was focused on lower priced areas where the cash flow was, the rents were very favorable relative to the cost basis, but I knew I wasn't going to win the appreciation game. They would go up in value, but something nominal, like 3 or 5% a year, 3 to 5%. But the cash flow was so appealing, I didn't really care. My primary focus was cash flow. As I've matured, I focus more on better properties that will appreciate more. Yes, I definitely like cash flow, but I've already have cash flow and I have no debt. So I feel like I'm okay in that regard, and I'm going to focus on appreciation. So the answer is two parts. The first part is what does the market give you? And the second part is what is an investor's personal preference? So like where you are, Melanie, I would probably flip in Austin, or if I had money to bank, I would buy in Austin to hold it and maybe not put a mortgage on the property. So I don't want negative cash flow. In any case, I don't want negative cash flow, but I might have a lot of money tied up in a property that I can't use elsewhere. Now, that's the risk I'm willing to take in that scenario. But if I was looking for cash flow, I would definitely go out to like Fredericksburg, Temple, places like that, where there's still, you can get properties for, 130, 150,000, and they're more likely to be rentals. So if I was in Austin, that's what I would do. I would go out to those areas for the rentals and stick inside Austin for the flips and appreciation. But I want to ask you, Melanie, does that help you? I mean, we can delve more into that subject, but
Yeah,
it really is two parts. Okay.
that helps me because like I was so tempted with those. So my strategy is buy and hold, and I also want to do the ALF. And so I don't want anything that's going to hinder me in that, but I have opportunity to buy. One of my clients that I got her into investment property, she's ready to retire. And so I'll have her dibs at 2 of her properties. So we're in these bidding wars right now where people are bidding above full price. And so I have opportunity to buy without any competition. So I was like, well, I may want to do that. So I was going to call, I was like, I use my strategy call to call you to get, because I was like, I like those the condos for $300 a pop. I was like, I can use a cash flow, but then I don't want to give up over here too for this new opportunity that just came up this weekend.
Yeah.
So, yeah.
Well, and I appreciate that. And I will tell you, there's actually a lot more to this. For example, and I'll just give you my own life example. So all those properties, guys, I bought early on, they really did not ever appreciate much. So what that meant is later on, any equity I'd built up in there was simply because the mortgage was being paid down. You follow what I'm saying? So in rental properties, you got cash flow, net operating income. You've got appreciation. It may only be 3%, but it does appreciate. You got depreciation, right? And you can always sell the thing later on. But in any case, you've got the equity pay down. So in other words, if you had a mortgage that's gradually being paid down, that's really the fourth. The fifth way is you actually can sell or refinance later. Now, having said that, in a market like Austin, that's been rapidly increasing, there's markets in North Carolina, I'll show you, same thing, rapidly going up. That gives you leverage later on, borrowing capability. In other words, my whole business leapfrogged when I started borrowing against the equity in the form of a blanket mortgage. It was a second mortgage, but it blanketed all the properties I had. It was a blanket mortgage set up as a line of credit, commercial line of credit. Found a lender who said, I'll do that deal. It wasn't easy, but I finally got a yes. So I didn't have to refinance all my existing mortgages. And this is an important concept. When you refinance a mortgage, what happens with the amortization?
Yeah, starts over.
Start over again. Yeah. So I didn't want to do that. All these properties I'd pay down 5, 10 years, 12 years. And that's why assuming a mortgage is sometimes very, very attractive. But in any case, back to this. When I was able to borrow against all the equity, it gave me a lot more power. I was able to take my business and go into bigger properties. So had I bought fewer properties early on that were in a rapidly appreciating markets, I may have been able to shift my focus more quickly by leveraging those more quickly, because I would have theoretically had more equity and start buying bigger properties sooner. I don't regret anything I did. I'm just telling you, I've done that own math in my head, and I'm thinking, what if I had done the better properties right off the bat? So when people ask me, should I buy less expensive properties and do the cash flow, or more expensive properties and bank on the appreciation, I always give the standard lawyer's responses is it depends.
That makes
Where
sense.
are you? How old are you? What do you have in your family's savings, if any?
Yeah.
What are your ambitions? How fast do you want to be financially independent? There's a lot to think about. And if you guys are interested, I'll tell you what we'll do. If somebody can remind me of this in an email, I'm going to show you guys something called Decision Matrix. Okay. It's a wonderful, awesome tool. And it helps you make critical decisions that are often very complex. There's lots of variables, lots of choices, and you have to bring some logic and rationale to the equation. Otherwise, your mind will just drive you crazy. So if you guys can remind me of that, let's spend a class doing just that, because that one tool, you can use it for buying properties, you can use it for relationships, all kinds of stuff. But I'm telling you, that is one of the most important tools I've ever learned to use. I learned it when I was 25 years old, and I've been using it ever since.
That is cool.
Amazing tool.
I'm
And
sending
I'll share with
email
everybody.
right
That'll be my St. Patty's Day gift. How about that?
now.
Yep.
Thank you.
So anyways, back to this. You're very welcome. So that's Alabama. Let's just take one more before we move on, because we have a property we want to look at with Susan Murray. So that was Alabama, and that was 115 a foot at 243. Actually, does anybody want to pick? Who wants to pick a state that's maybe not on this list, and let's just see how it pans out? Anybody want to volunteer a state?
Florida?
Northwest Florida.
2 Floridas.
Let's do Florida.
Florida's on
okay?
there? I don't see Florida.
No, it's not on there.
Oh, okay, gotcha.
let's
I'm
do-
fine. I like Florida. I'm from Florida.
Florida's going
Why
to be
there?
complex because Florida's like 7 different markets. But let's just do this average. By the way, Florida is actually very favorable, believe it or not. Average home price in Florida. But Florida, again, remember, Florida's like 7 different markets, guys. So this is crazy. Look at that. You got 229, 300,000. Good Lord. Let's just find something that Biz Journals. I like Biz Journals. I'm going to guess it's around 300,000. Okay. From his Florida falls below the
That's
national
almost 2
average.
years old, though.
Yeah, that's true. I'm gonna say, let's say medium price is 285. That's nationwide. What just happened there? I hate these things when they just like they don't just give you the answer. They make you gotta fish for it, you know.
That's also missing.
I'm pretty sure it's gonna be
21 months of
300,000.
appreciation.
Yeah, let's say 300,000, and let's go back here and type in Florida rental rates. Let's see what we get. So, and by the way, I'm just giving you a broad brushstroke here. You absolutely would dig into the individual markets. Like you wouldn't do something at the statewide level. You would go into the individual MSAs. You know, you'll notice a huge difference here. Look at Jacksonville, probably one of the lowest areas, price and rents. And here's so you got parts of Alabama there because of the Panhandle. How about that? That's interesting. Wait, I'm sorry. What took me back to Alabama? Let me go back here. I'm sorry. I didn't notice that. I thought I clicked Florida. Okay, now it says Florida. Now let's see. Statewide FMRs. Here we go. Okay. Gainesville. Gainesville's a college town. That's why I picked it. Look at the rates there. And look at Lauderdale. Okay. Not quite, but pretty close to being twice as much. Okay. Let's see what the cheapest one is. 13, there's 1183. Sebring, Florida. I've been there before. I think that's probably the lowest. And the villages, look at the villages. Holy smokes. Must be all the hey guys, I guess I shouldn't say this, but I'll see anyways. There could be all the hanky-panky going on there. Anybody know about the villages?
Hey, Gary. So,
It's a famous place in Florida.
hey, Gary. So,
Yes.
Cape Coral was showing a 3-bedroom,
Yes,
2
sir.
bath at 1550 up at the top.
Yep.
I
For a
lived there.
3-bedroom, right?
I lived there
1559.
I lived there 2 years ago. You can't find a house for $1,500 in Cape Coral that's a 3-bedroom, 2 bath. So where are they pulling that number from? I mean,
Yeah.
And they're saying that's current.
Yeah, this is housing overdevelopment, and they're taking the data. 2021, yeah. So I would probably, if it was me, I would look at 2020. Let's see if we can force it to give us 2020, because 2021 is going to be a projection. We got to go back a few steps here. But this site is taking actual data from housing and urban development. So that would, you know, depending on how much you trust it. Whoops, sorry guys, I just lost the whole thing there. Depends on how much you trust the federal government, I guess. Let me just see. I'm trying to figure out how we can make it give us 2020 instead of 2021. I don't think it likes that for some reason. Let me go back here. Oh, here we go. Fair market rents. Let's do 2020 data. Let's do documents, revise FMR areas. I don't know if that's it or not. I don't think we want to do query tool. I thought it was data. Query tool. Click here. Here we are. 2020 FMRs. Okay. Okay, Florida. And statewide FMRs. So this would actually be historical data. And it's about the same, you know, not much. But what's interesting, Dave, is remember they're accounting for all properties. And you know how Florida is. I mean, you could have a pretty sweet neighborhood, and then right down the road, I mean, look at like St. Pete and Clearwater and Treasure Island. I mean, there's some kind of not so nice places around there. Then there's some spectacular places, you know. So this, remember, this is just an average. It's not like where you or I would probably live, but that's probably what's happening, David. It's taken in all properties that are rented. And then
Maybe
you're going
they-
to include some of the,
Maybe it's the fair market rent is what they feel rent would be fair versus
Yeah.
what they're actually charging.
yeah. Well, it's supposed to be based on actual market data. That's what I used to, way back when they rolled this out years ago, I was actually part of a panel. And now I will tell you, over the years, they started lowering the rates for single family homes and raising rates for apartments. And their logic was it costs more for utilities than a single family home. We're like, well, of course it does. But they were using that as their logic for adjusting what they would give people for rents, as opposed to what really the market was doing, So in any case, let me show you one more thing here. So I like roofstock.com to determine what are the fastest moving markets, okay? And here you go. There's Austin, number 2. Austin's number 2. Nashville, we already knew about that. Nashville. Dallas Fort Worth continues to move up. So does Charlotte. So why this is important is this: where would you want to flip a home in a market that's moving up or a market that's stagnant?
Moving up.
Yep, absolutely, and preferably rapidly. It may be more competitive because everybody else has the same access to the same information. But if you look at here, there's some incredible surprises, right? For example, Atlanta. Atlanta has been growing like crazy for a long time, but I never saw Atlanta as being one of the fastest markets. And there it is, number 11, right? Here's a surprise. Look at this, Northern New Jersey. Now, why? So is Tom Silvestri on? Tom, are you on? Let me see here. Well, I've got to promote a lot more people. Hang on. Hey guys, sorry, I didn't realize you were out. Let me promote you. Hey, Kevin Keller, I left you a message the other day. Give me a call or a chat, okay? So we can set up a one-on-one. Let's see. We got lots of awesome guests here. Floyd, good to see you, buddy. There's a fellow Floridian. Tony, good to see you. Alexandra, good to see you. Hopefully, so Alexandra, Tony I was going to have you show Tony, I think he was going to call anyways, how to get to the landlord-tenant cases. All right. In any case, back here, how many of you think here Northern New Jersey is a surprise? I'm one of them. But it's because a lot of people were vacating New York City and going across the river. That's why. Okay. In any case, so I would probably flip in these markets. Phoenix is another. That's always been a good safe bet on the up market. Now here's the problem with Phoenix. When it drops, man, it drops like a lead balloon. So for me personally, right now, I would probably not flip. I wouldn't be flipping right now because there's too much risk. Maybe you get one more season out of it, and maybe you don't. There were people in Florida in 2007 that thought they would get one more season out of it. But it was a bloodbath. Okay. So
barely got out. Barely.
What's
like,
that?
Barely got out. I flipped the house and I barely got out of it, like by the skin of my teeth at that time.
Yeah. Yep. I believe it. I mean, the same. I did my last flip before that recession, literally July 30th, 2007. And it was just one of those gut calls. I think I'm going to just go buy some more rentals because the stock market started getting crazy. And I remember from before when it did that, it was right before a drop. And I thought, well, I don't want to, make a mistake. So thankfully I pulled back. But in October, it was just disastrous. Man, it was fast, So in any case, I like to use roofstock.com. There's all kinds of data sources, but what I'm looking for is something that's easy to follow. There's 20 markets there. Look, Washington, D.C., Northern Virginia, Washington, D.C., Maryland. It just goes to show you government is good business. Well, I shouldn't say that. Government is big business, okay? I don't know if government and good should ever be in the same sentence together, but nonetheless, it's big business. Lived around there my entire life, and I've seen the prices just go. In the last recession, the DC area never skipped a beat. They just kept cruising right along, So in any case, hey, would you guys like to have a little bit of fun? And for the last 15 minutes, analyze a property? Like, let's put it up on the screen and pick it apart. Susan, is that okay?
Yeah, that'd be great. Thanks.
And Susan, I apologize. I was driving today. I literally just got in. If I share a screen, if I promote you to co-host, would you mind sharing your screen and we can look at that property?
As in,
Is that
I
okay?
pick up, do you want me to get the listing sheet up and the?
Yeah, if you could.
You're
Yeah.
stretching me, but let me pull that up.
Okay, so I'm gonna make you a co-host.
Hey, Gary, while she's doing that, can you go back over the 4 ways you talked about making money on buying a rental? You talked about cash flow, appreciation, depreciation.
Oh,
And
an
there's a fourth-
equity pay down.
Thank
It's
you.
basically paying down your mortgage, yeah. And the fifth way, Gina, is you can actually cash out. You can either sell or refinance later on, you know?
Perfect,
And
thank
that's
you.
actually there, and that's very basic.
And
Yep,
then also,
yep.
while
So
Susan's doing that, I may
everybody's
have
got to decide.
questions in the chat while she's pulling that up, or at least one.
Oh,
back there.
I'm sorry, thank you. Yeah, okay. Let's see. What
Okay,
am I
I've
looking
got
for,
the,
Gina?
I've got the
Oh.
listing sheet and I'm gonna pull up the information sheet.
Okay. Gina, did you want me to show you something on the chat box?
Michael had a question on the chat box. It's below where you dropped in all the links, right below that.
Okay.
Oh, no, he didn't. He direct messaged me on that one. Hey, Michael, do you mind if I read that? Because I thought it was really good.
Oh, he must have private messaged you.
Yeah.
Okay. Well, while he's doing that, you can always interject. But so Susan, look for on your screen, share
Yeah. Do
screen
you
share.
want to do the listing sheet first or the income and expenses first?
Let's do the listing sheet. Let's get the
Okay.
yep, get the basics.
Whoops, did I do that right? I think I did. Can you guys
There's
see that?
Darcy Lowe's. Yeah. Oh, that's a cool looking place.
Yeah,
I like it.
it's 2 different buildings and it's right near a college that my kids go to. I'm on parents council. Yeah,
Okay.
so they just connected with a new property manager in 2019 that did a whole bunch of renovations to it. I did have some folks that wanted to see it tomorrow, but thus far they have backed out because they thought that there wasn't enough income with it. And I don't really know how to analyze it well enough. So that's why I asked if we could look at it so I would know if this was good or not, or if I needed to make a lower offer or whatever.
Yep. So let's do this. Let's see, the list price is $675 and it's 9 units. So far so good. But did they give you the rents for this building? Is there an attachment or
Yes,
there's
and I have that. It's just I don't think I can pull them both up at the same time. So do you want to look at this listing first?
Yeah, let's
or do you-
continue down here real quick. I'm sorry, go back up just a wee bit. All this stuff right there. Oops. Yeah, there we are. 675. All right. Let's see. Anything else here? Zoning R4.
Got your gross income
Okay.
right there, 82,559.
Right.
Okay.
74.92.
All right. All right. Estimated total finished square footage, 10,000 square feet. Total number of units, now it says 12 down there. Total number of units is 12. Scroll down just a tiny bit more.
It's because it's between the 2 different buildings.
Oh, gotcha.
Got a
Okay.
3 unit with it.
So on 11 West Princeton, the whole upstairs is a 4-bedroom apartment. And then the other building, I believe, has 3, maybe it was 4, but I can pull up the information real quick when you're ready.
So is the 675 for both buildings,
Yeah.
Susan?
Uh-huh.
Oh, okay. All right. All right, let's go ahead and go look at the financial sheet.
Right.
So 12 units, 675. I mean, I don't know about you guys, but like Jeff, I'm kind of liking this one already, you know?
All right.
It's a good looking building. Looks like they remodeled it.
They did remodel it. That's what they've just done. So they just since 2019 have raised the rents a whole bunch. You guys tell me if you want me to
Okay.
go slower. And then we've got pictures of the
Tell
renovation.
Tell you what,
How many bedrooms
hey,
per
if
floor?
you're showing something,
Pardon?
How many bedrooms per
hey,
unit?
Sue,
They're different. Let's see if we can get to that some here.
You got 12 units.
and,
that's
and Susan, you may
50,000
need to do
dollars.
you may need to do a share again to share this other, the other
Oh,
document
really?
you're showing us,
Okay.
because we can't see it.
Oh, yeah, it
Yeah.
says it's paused. Let's see, how do I do that? Sharing is paused. It must have frozen. Resume share. There we go. Oh, but now we didn't get, okay, that's because I'm taking it from having saved it in Finder. Maybe I can get it better this way. And some of it is flipped, unfortunately. Okay.
There
So
it is.
this, oh, is that better, you guys?
Yes.
Right, so we have, see all the upgrades, 3 units fully remodeled. They all have washers and dryers. They've just done all the beautiful floors. They put on a new roof by not a great roofer, unfortunately. Extensive remodeling. I am not sure, but we'll come to it, how many units are in each and how many bedrooms. So we know that there's one that's 4 bedrooms. I think for the most part, there are 2. Look at that rent increase. Because it had just been completely renovated.
Was that the one up top, the top floor?
No, I do
Okay.
not believe so. Okay, now I don't know how to flip this. You guys know how to flip it?
Yep,
Right
right
there.
there.
That does.
You
Oh, there
got
we
it.
go. Okay,
Bingo.
and let's see if I can make it bigger.
The good news is you're using QuickBooks, so that makes it easy. And hit the plus sign, upper right-hand corner.
I
Just
have
it'll
to move
zoom,
you guys to do that.
it'll zoom in a little
There
bit.
we go. Okay. Oops. I think that's a bit all I can do. I'm gonna try to, yep, it won't get any bigger for me. All right, so see if I can read it to you. So these are the what they've done and
Mhm.
expenses. So we have a remodel they spent $8,500 on. AEP is our electric 2376.93, and then building supplies, capital improvement, another 3,000 there. They've just put a lot of money into it. Altogether, $46,000 in the last couple of years, updating everything. And this is just expensive. So electric, gas, insurance, landscaping, Lowe's, insurance, taxes, etc.
Well, hey, yeah, hang on one second. Sorry, go back up. So
Mhm.
the gross receipts are 80, looks like 82,000 and some change.
Yeah,
All right. And we know the first expense, so what they did, guys, if you want to write this down, they use what's called tax rule 172. And what that says is if you own a business and you had a big capital outlay, instead of you depreciating it over the life of the property, you can take it as a one-time hit, as a one-time expense in the year you took the hit. That's what they did with that. It says 11 something remodel, because you generally can't expense an $8,000. That's a capital improvement, but they use tax rule 172. Some tax accountants say you can't do that with real estate. Some tax accountants say baloney. If it's an LLC, then it's a business and it qualifies. That's what my tax accountant does. But regardless of that, what I'm getting at is you would then want to add back in that 8,000 and some change into your, it wouldn't be in your expense bucket, it'd be in another bucket, which means your cash flow is better. Okay, your net operating income. So I'm looking at some of this stuff, Susan, like decorating. I don't get that, but that's okay.
that's
I
when
see.
they were just updating the look of the building. I can show you pictures
Right.
when we get back over to the listing sheet.
Okay, everybody okay so far on the income and expense? Okay, and there's no interest payments in this, right, Susan? I don't see any interest payments.
I don't either.
Okay,
I do. Are those annual expenses or monthly? I mean, it's like 2,900 is the taxes for the year.
These are going to be years by the year.
Annual.
Yeah.
Yep.
Okay.
Yep. Yeah. Our taxes aren't very high here. So 2952, isn't that amazing?
Yep.
All right, let's rotate this and see what we've got. Oops. Again. Okay, so this is last year, 1/2019 through 12/31 of 19. So rents received are 52.3, total income is 52.3. Expenses total are 59,696. And this was, yeah, this was still doing renovation. So there's a contractor for 6,300. Home.
Well, look at the supplies, 27,000 and some change.
Mhm.
You know,
All right, so if that's all the expenses, let's see what they came up with over here then. All right, so that's more expenses. Here's building 1, building 2, apartments, apartment number 3. Okay, so they've just did a lot of improvements to the buildings. All right, let's see what else.
okay.
Piano. Current rents. Okay, here are current rents. We have a 1-bedroom for 625. We have a 2-bedroom, 2-bathroom for 825, just remodeled. 3-bedroom, 2-bath for 850. 1-bedroom, 1-bath for 5.25. 1-bedroom, 1-bath 550. 1-bedroom, 1-bath for 575. 1-bedroom, 1-bath 500, 550. 2-bedroom, 1-bath 775. And then so they just spent 10,000 remodeling, and they're projecting this one to be 1,400 for rent. 2-bedroom and bath 725, 2-bedroom, 2-bath 550. Oh, they have left the tenant in. And then 20,000 remodeling this one. They having a hard time kicking her out. So there you go. Those are some of the rents.
Well, before you go any further, it looks like back up to the rents. You always want to look at what they currently have. You know, everybody projects outward, like, you know, like their one line that says there, apartment 7, 1,400 a month projected. That's more than twice as much. Is probably almost the next highest rent.
Mhm.
They just spent 10,000 remodeling, and the next highest rent's 825, 850.
I'm wondering if that one, Gary, might be the 4-bedroom, because it is so much higher than everything else.
Okay, so what I'm trying to figure out here is, we look at current data. We like to look at the last year. Here's what you want to ask for, guys. In a building like this, you want 3 years of rent rolls. Okay. 3 years of tax return, i.e. Schedule E, unless you're using another type of business entity, maybe it's Schedule C, but typically it's Schedule E. And then I want to see what that guy showed us. He's using QuickBooks. It's called P&L statement. I want to see the P&L statement standard for the last 3 years. And what I'm looking at is a pattern. Like, what have the rents been, and what were they 3 years ago? What are they now? And use that as my projection going forward, and not use their projections, because they're always going to be, you know, high. But it looks like here on the low end, you got 525. On the high end, you got 850, 825, and 775. So let's say on the high end, you're looking at, let's see, you got some 1-bedrooms. Let's say you're looking at 750, okay, to be safe, times 12 is 1,500 times 6. That's 12,000, I think, $12,000 a month, okay? If you multiply that times 12, it's 144,000 a year. They're asking 675. Susan, who pays the utilities on this? Is anything separate?
I don't know. I'm sorry. I should have looked at that better. Sorry, I'm not sure.
Well, here's why this is important, guys. I have a rule I call the 2% rule. If I'm paying utilities, then I want my monthly gross rent to be 2% of the purchase price. So in other words, if I'm buying a building for $100,000 and I'm paying utilities, then I want the gross rents to be $2,000 a month, 2% of the purchase price. Okay, so this is let's just say 600,000. We know we could reasonably get, it looks like 12,000 a month. No, I'm sorry, hang on a second. 750, 9,000 a month in gross receipts. That doesn't quite meet the 2% rule. But also interest rates are very low right now. So I might go for a 1.5 or 1.65 or 1.7, right? If I don't have to pay utilities, I know people that'll do the 1% rule right now. In other words, gross rent is 1% of purchase price. So if you're buying building for 100,000, you should be getting 1,000 a month. If you're thinking about mortgage payment on a $100,000 property, you're probably going to cash flow with $1,000 a month rent if you don't have to pay utilities. So the utility expense is a big thing to figure out. Okay.
And this has baseboard heat. So can I go back to the listing sheet and maybe we'll see that?
Yep. Yep.
Yeah, because this, remember, it says it's only making 82,000. Oh, wait a minute. This is only cash flowing 82,000, right? Where was that?
And that makes sense because he's got a lot of 500s and 600s and stuff like that in there, you know?
Yeah, 82.5. Yes. So it does have baseboard heat. Let's see. Separate electric. So they're all paying their own electric.
Okay. That's actually pretty good.
And I'm actually surprised. I wanted to look at square footage too, because our rents those are good rents comparatively. Where do they have
Yeah.
square footage per unit? They don't have them. And they're just, like I said, they're all redone. Let me scroll through some pictures for you guys and show you what they've been doing.
There's
here.
separate electric. You
Yep.
said the owner pays water, I'm guessing, right?
I think so, yes.
Okay.
And this is a really nice neighborhood. So see, they've just redone all the floors. They've redone the kitchens. They've put washer dryers in everything. And there's some pretty common areas I was looking at earlier. See, like that with the window. Oops, sorry. So anyway, I'll flip back.
So here's what I would suggest, guys. This is one based on the initial view. I would absolutely use the calculator, you know, the one that's rental property evaluator. The one we used the other week when we looked at the properties from Newport News and Cincinnati. I would use that, and I'm going to challenge you guys to do a homework assignment. Susan, can you share the listing on this in the chat box?
Yeah, I guess I could. Sure. I'm going to stop sharing, right? You guys done with this?
Right.
Should I stop
Yeah.
sharing the screen? Okay. All right, then I can go back. You know what? Actually, if you guys want to do it, what do you want to just send me your email address and I'll send you both the listing sheet and the income expense stuff? Do you want to do it that way?
Yeah, type in your email.
Yeah,
Susan,
okay.
if you want in the chat box, and everybody can email you. Because otherwise you'll be writing down email addresses.
There you go.
Mary, can she just send it to Beverly and have her put it in with the recording?
That's a great idea. Yeah, I'll
To
do
make
that.
it easier.
Yeah.
There you go.
Yep.
And
So
what I would
is
do,
the
guys,
period?
if you haven't done this before,
Is there a
we're able to
like
make
a
the
covered
call from
parking or is it open parking?
But,
A
Oh,
covered parking.
somebody needs to mute. I'm not sure where that's coming from. But, in any case,
Just
I
give me
would
1
use
second,
the
please.
homework
1 second.
assignment and use that calculator on the website. I wonder if
Yeah,
we can
sorry,
figure
go
out.
ahead.
It's coming from Mike Cuccaretti.
Mike
Cuccaretti.
So this is like a
Okay.
give,
Here. Thank you, sir. So in any case, guys, if you want to do that, that'd be a great exercise if you haven't done it before. Do some what if scenarios on the Excel spreadsheet using this listing. Beverly, if you're listening, could you please include the rental property evaluator, that calculate basic Excel spreadsheet for everyone in tomorrow's email, because we have a lot of guests on tonight. And I want them to have that and practice that. And you can see what's possible in a college town in a tertiary city like Lynchburg. Lynchburg is a great little area. And for me, this would fall within the realm of what I would take the next step on, which is do the calculations. If everything checks out and I go see the property and drop in an offer. Because I like the work that they did on the property. I just need to physically check it out after I do the financial analysis. But that's the steps I take. Get something like this. It looks pretty. The numbers look promising. Do the more in-depth analysis. Go make an appointment. All right, and walk through. Look for deferred maintenance. Add it all up. And here's what you do at the end. Let's say you're going to make an offer. You actually determine the price based on the performance. And then you back off what you've accounted for as deferred maintenance off of that price. So let's say you come up with $675 for a price, assuming everything was smooth and clean and marketable and no deferred maintenance. All right, that's step one. Step two is add up all the deferred maintenance and back it off of that price. And that's how you actually make an offer on a big multi-unit property like that. I mean, that's the simplified version. What I was going to do in the next few weeks is go through how do you actually do the physical analysis? What are the steps involved? And we'll be able to go through and do it. We'll do it on Zoom. I'll give you some examples. But for right now, what I would do, Susan, is I would do that spreadsheet. And if you, I know this week, by the way, guys, I know this week's already filled up with appointments. And the reason I was off half a week last week, so there's a lot of people were catching up because I was off last week and having strategy calls. But I did leave some blank spots in there. If anything urgent pops up, please don't hesitate. Call me, text me. If you're in the highest and best scenario, whatever it is, you can get a hold of me. But next week should be pretty well wide open. So Susan, is this something imminent, like somebody's looking at it like right now and ready to move, or what's the current status on this one? Oh, you're muted, Susan. Sorry.
Sorry about that. I have two clients that were interested. One of them, like I said, just decided not to come to the appointment tomorrow because I thought the cost was too high, but I feel like I should just call them back and tell them to come look at it, especially after do the analysis. And then another one, I'm trying to make an arrangement to get his wife to go see it because he's out of town and it's only getting shown Tuesdays, Thursdays, and it will be gone by the end of the week because it's booked for tomorrow.
Well, this building's going to sell. I'm telling you that right now, just looking at it.
Yeah.
And there's a lot of people coming in for like the property in, by the way, guys, update, property in Cincinnati, 2 offers, one of them full price, the other one 1.65 cash from a local investor. How about that? Isn't that amazing? So Susan, you're likely, this guy's going to get some offers from like New York and who knows where else, California. But what I would do is I would tell them if it's looking more than 50-50 positive, I'd put a letter of intent on it at a minimum, just to try to tie it up. Okay, put your name in the hat. And then you can follow through with getting more of the analysis done and decide to move forward or not. In a market like this.
What did
Oh, 50-50 chance. It's a greater than 50-50 chance and it would be a good deal. And I think this is clearly greater than 50% chance it's a good deal.
Okay.
I'm not saying it's a 10 because we haven't done the calculations on it, but it's definitely, to me, it has enough promise. I would at least put in a letter of intent and tie it up because I'm pretty sure from what we're seeing, it'll be gone before you can blink an eye.
It'll be gone by Friday. Yeah.
Yep.
Hey, Gary, I got a question.
Yes, sir.
So we're analyzing this property using the calculators that you use and that we use, but granted, there's a lot of investors out there that don't drill down that deep and agents that don't really have that level of detail. The listing agent on this one, just by reading a lot of the comments on there, there's a lot of misinformation that they understood was not there. Like, I don't have this, I don't have that. So they're not really presenting the accurate numbers. So when we look at this property and let's just say we run all the numbers, we run the calculators and everything comes up and it's really, you know what, it's not really a good deal. It doesn't fit into our parameters, but in a hot market,
Yeah.
you go ahead and pull the trigger regardless of the numbers because you know what, it's still probably going to be a good deal. Maybe they're not going to work out the numbers according to our calculator, but how do you navigate that where, you know, in a real world scenario where we run the numbers on our spreadsheet that you give us, our calculators, and it's like, you know what, Jerry, this really, the numbers don't work, you know, I mean,
Yeah.
at what point do you go, you know what, this thing's going to be sold in a week? I mean, if we wait for the next one, it'll probably be the same scenario. Nothing is going to be a
Yep.
perfect deal. At what point do you go, let's get in the game, man? You know?
Good. That's an excellent question. And two-part answer. Number one is in normal times, we'd absolutely would do more due diligence before we'd ever do any paperwork. And we'd have more time and so forth. But this is definitely not a normal market. The part two answer, Jeff, is, and I really appreciate the question, is I've seen this before. We're likely seeing the very front edge of the correction. You know, we're not just seeing increased gas prices and increased interest rates like we talked about last week and the week before, but I'm also seeing people selling who've owned their properties 10 to 30 years, and they're saying we're cashing out. We feel like we're at the peak. We don't want to wait for the bloodbath. We're going to take our money now. That's what they're doing. And I've seen it with three of my friends in the same town, Virginia Beach. So in 3 months, three of them all said the same thing. You know, without consulting me. Can you believe they didn't even consult me? They just did it, but they did the right thing, you know? So in any case, what I'm getting at is this. If you think about the commodity of rental real estate, would you agree it's a relatively fixed supply? In other words, you can't just snap a finger and come up with a bunch of more rentals, right? You got to build them, right? So in a market correction, do more people buy or to own, to live in, or do more people start renting?
Renting, right?
They start renting. So what happens when you introduce additional demand on a relatively fixed supply? What happens to pricing?
Yeah.
Rents go up. Yeah. Now there's a caveat here. You have to have the right kind of properties. And this is what I want to tell you from just you learn from me. In the beginning, I was buying I never bought the war zone type stuff. I never got into that. But I did buy some C- properties. They were basically decent homes and low-end neighborhoods, a lot of tradespeople, things like that. When the recession hit, the lower-end properties struggled on rent collections and vacancies and things like that. But the better properties saw an increase, 0 vacancies, and collections higher than we've ever seen before, and rent increases higher. When I say collections, I mean collecting the rents. I don't mean like we had to go get the collection people after people. That's not what I mean. I mean we collected more rent before the 5th of the month, and more increased rents on the better properties. So, and when I studied the market, I realized, well, of course it makes sense, you know. So that's why, Jeff, I'm kind of leaning towards, with a property like this in a college town like Lynchburg, and it's been remodeled. I mean, look at all that stuff they've done to it. I'm thinking I would make a move on it, you know, because I know I can increase rents. I saw the rents. I'm pretty sure
The rents are low for it.
Yeah. So I know there's increased rent potential there. I know over time, you know, if I hold on to it to the next market, it might go up 50% in value. I don't know, but it's probably going to increase in value, because Lynchburg is one of those little areas where a lot of people like to go to and retire, right? Right, Susan?
Not
It's
just
there's
retire,
a great,
everybody, all the demographics want to stay here now. All the
Yeah.
kids that graduate out of Liberty want to stay here and their parents come to join them.
it's a great town.
Yeah.
So Jeff, I just happen to have a little more knowledge on Lynchburg than some other places, and that's part of the reason why I'm saying that.
So
Yeah.
like analyzing the numbers, just in this scenario, while they would not be perfect and in a normal world, you might say, you know, there might be a better deal out there. It's more or less a baseline to know where you're at, but you know what, let's go ahead and pull the trigger, because if you're going to hold this thing for 5 to 10 years, it's going to be a win,
I'd
especially
say
with raising
10 years.
rent.
Yeah, 10 years should always be, if I'm buying for cash flow, I'm planning on 10-year hold minimum, 10 to 12
Right.
years. Yeah. The other thing too, Jeff, is the reason I want what's called certified rent rolls. Is Randy on here? Randy Weaver, how you doing, buddy? So Randy's a commercial guy. Randy, you know what I mean by certified rent rolls? The owner actually signs off that that's real data. I want the rent roll showing the tenants, each tenant per unit over 3 years, so I can see gaps in rents and look for patterns and things. And what I'm looking for are hidden defects, not in the physical building, but hidden defects in the finances that nobody's telling me, because they don't want to. Number one, they probably don't want to tell you, but number two is they might not even know themselves. So I'm looking for patterns of one unit's always behind on rent. One unit's, you're always evicting people. What's wrong with that unit? Why can't they get a good tenant there, for example? I actually will go and look at the public records and look for, I would call the city, the courthouse, and say, can you give me the case history on 123 Main Street? And tell them I'm making an offer on that property. I want to see what the history is of evictions on that property, and they'll do it. Okay. You can even demand that as part of your offer. So what I would do is I would play detective and dig down in there until I feel like I've uncovered the stuff they don't want you to see, you know. And once I understand it, I'm okay as long as I know what I'm dealing with. Like I've had to go in and kick out a lot of tenants before because they did a horrible job of leasing and screening and managing. But the thing is, the building was good. So I thought, well, at least I know what I'm getting into. And we just went in there, the new sheriff's in town, and we went for the worst offenders first, kicked out the worst offenders first. That set the tone for the rest of the tenants. Some of them shaped up, some of them shipped out, but we raised all the rents, and the rest to say is history, But physical defects can really bite you hard, man. You think you're in good shape, and you take a wall out to put in some new electrical or something, and you see a crack in the stack or some expensive thing. Those things were painful, but the management and financial stuff we could easily see by looking at what they told Uncle Sam and do the detective work. That's much easier to manage that than it is to manage a hidden physical defect, So does anybody try to replace an old cast iron stack in a 4-story building? Yep, it's not any fun. So, okay, guys. Hey, this is another fun one. I love it when we look at properties. You guys like that when we look at properties?
Oh, yes.
Yeah. How did I do on the first part of the content? You feel like you got a pretty good idea of determining where you would buy rentals and where you would flip homes? Is that okay? All right. Okay, so I'm going to give you a heads up here. We're going to bring on Rick and Anna in another couple of weeks. They're my friends from Florida that have done everything. The big team, property management, their own investor club, and of course they invest themselves. And I'm going to bring on one of my oldest agents from my old brokerage, Christine, and one of her clients, Benny, who owns 8 restaurants. He's one of my private coaching clients. I don't coach privately anymore. It's just it was a favor for a friend, and he's not an agent. He's an investor. But I want to have you look at his portfolio and show what I did with him. Like he was buying little duplexes and flips. And you guys remember me talking about me buying a seminary a couple months back in Pittsburgh? I wanted to use it for residential assisted living. Guess who bought it? Benny, my private coaching client. So tremendous upside potential. So I just want you to see that progression and let him talk from his own heart. He's just one of those, it just lets it all out. He'll say stuff, and I'm taking a risk here because some stuff might come out. I might be thinking, do I have to bleep that, or can I edit that out? But you're going to get the real stuff, So that'll probably be in April, and I promise in May I'll have Joe Chawanski, and that'll be the real test of, oh my gosh, I might have to make it R-rated or something. I don't know. We'll find out, But real life stories, real people, real investors, showing you from start how they got started and how they got to where they are now. And it's been a real blessing for me to be able to do that with these guys, and just an amazing journey. And we've become really good friends. I've made more friends out of this business than the entire first half of my life, So, okay, any final questions before we go eat apple pie and ice cream? I'm going to check the chat box here. let me clear off these questions here. Hang on one second, guys. Susan says, I'm not sure about longevity. The rents were raised because we're renovating the buildings and a new property manager is aggressive. Okay. Jeff Allen, thanks for having Marcus Highcoffer on one of your podcasts. You guys, yeah, if you know Marcus, by the way, Melanie, Marcus is also a fellow Austener, and he's big in the stock market, but he's also an investor, a real estate investor.
I don't see Marcus here. Where is he on here right now?
Yeah, Marcus Highcotter. This is from Jeffrey Allen. He's made a comment. Thanks for putting Marcus on my podcast. He's an awesome guy, real tall dude. He used to have long hair. I don't know if he still does anymore. And I learned a lot from him about the stock market. And he learned from me about investing in real estate. Yeah, he said, by the way, if you're interested in investing in the stock market, I'm telling you, I'd go to Marcus. What he does, it's like scientific, and it's basic common sense stuff. He just applies science to it, logic and rationale. Okay, this is Michael. Is there any residential investor agents from New Jersey? Please tell me. Okay, guys. So Roger Newell, you're on. Tom Silvestri, hope you're on. Let's see. Jackie's Aldana, you're on. Here it is, Mike Basil28 at gmail.com. And Jonathan Salmon. So that's the 4 people I think we've got in New Jersey. So hopefully you guys see the comment there from Michael. Michael, if you don't hear from anybody by tomorrow, let me know, because they may have already logged off, okay? But we'll get you hooked up with somebody in New Jersey. Okay, guys, going once, going twice. Thank you all for participating. Hope you have an awesome rest of the week. God bless you and your families, and we'll see you next Monday.
See you, Gary.
Adios.
Thanks a lot, buddy.
Take care, guys. You're welcome, man. Good to see you. Yeah, good to see everybody. Oh, by the way, while we're logging off here, I did a 14-hour drive today. Started at 4 o'clock in the morning from St. Pete Beach to get up here to Charlottesville. So hopefully I did a good job, because I feel like I'm gonna, as soon as I hit my head on the pillow, I'm gonna be asleep. So, but anyways, you guys have an awesome rest of the week. Great weekend, and we'll see you next week.